This is the APMEX Market Pulse podcast, your front row seat to expert discussions on precious metals. Hello, I'm Brett Elliott. Welcome to the Market Pulse podcast. I have with me here Ted Ancher. Ted, thanks for joining us.
Glad to be here.
Would you take a moment, tell us a little bit about yourself?
Sure. I've been here with APMEX for a little over 17 years. Started in the numismatic department, still in the numismatic department, director of numismatics. So basically we do everything from old half cents and large cents to pre-33 gold, which is what we'll be talking about today, and everything in between.
Great. Yeah, thanks for that easy segue.
Yeah.
We've got pretty kind of an interesting topic today to talk about. So, as you know, we've got our Market Pulse videos on YouTube, and it's kind of financial commentary, precious metals commentary, kind of adjacent to everything else that's going on in the world. And we have a lot of people who are really invested in what's happening and leave us really good comments. And one of the things that's been popping up frequently is gold confiscation. And it seems to have increased more as the value of gold has gone up, especially since it's gone past 3,500 an ounce. We've seen this more often. And we realized not a lot of people know what actually happened back in 1933 and what actually happened with gold confiscation. And so what we want to talk about today is what did happen.
Sure.
And could that happen again? Yeah. What's the basis for it? Is it practical? Is it legal? Spoiler alert, don't want to give away too much, but our government's not always been great with money. It may shock some people to learn.
I'm shocked. Just by you telling me now, I'm just completely shocked. Yeah, I mean, a lot of people don't know that, 2 days after he took office in 1933, he had a 5-day banking holiday, which basically froze everything. They had to get back on track. And once that banking holiday, kind of expired.
This was Roosevelt?
This was Roosevelt back in 1933, like literally 2 days, I think, after he was inaugurated. Back then it was in March. I think March 4th was inauguration day back then. So on March 5th or 6th or something like that, he put this banking holiday in place and kind of restabilized, everything. And, the solvent banks, were good. The insolvent banks were bad. And then there was kind of this in-between bank that, was not solvent, but not, desolvent or insolvent or whatever the word is. He basically had to restructure the whole banking system based off of this Great Depression that we were still in. I mean, that was basically his way of stopping the bleeding. I mean, it had been bleeding since 1929.
Yeah. So that's a great way to start this out is the times were 1929 to 1939, Great Depression. So this, in 1933, Roosevelt had issued Executive Order, was it 6102?
6102.
It sounds like a Star Wars reference. But and so this Executive Order, what it did is it said, anyone with more than 5 ounces of gold, that's ours now. Bring it in. And we'll give you $20 per ounce. And we'll issue you new paper currency. And that was the great gold confiscation. And so that's why, there's this whole category of products we have called pre-33 gold. And it was these gold coins that used to be a big part of the currency, a big part of the monetary system for us back then.
Yep.
There were a lot of problems with this. So I think the first one is the legality of it.
Yeah. Very suspect.
Very unusual. So when you issue an executive order, it's not like you're just making up a law. It has to be based on a law, right? So the thing that I thought was really funny when we started looking at this was he used the 1917 Trading with Enemies Act to justify Executive Order 6102, which was basically to deal with trading with Germany in World War I. Mm-hmm. So it was really not a very strong executive order. The legal basis for it was pretty weak. And so a lawyer named Campbell comes along, no relation to the soup, as far as I know. Just in case you were wondering, comes along and decides to sue the administration because he had tried to withdraw like 5,000 ounces of gold from the bank. And the bank snitched to the government and said, hey, there's a guy over here who's got all this gold. and we're not going to give it to him. We're gonna confiscate it. So he sues. He's a very wealthy lawyer from New York. Goes to the judiciary, and they say, actually, Roosevelt, he's right. You don't have the legal grounds for this, and that caused all kinds of bedlam. So now you have Congress convening. They passed the Gold Reserve Act of 1934 in response, and they backstopped it. They backstopped the executive order and said, yeah, this is fine. We're gonna take your gold. So Campbell never got his gold back, even though they basically admitted that it wasn't legal then. And I think there were some other things they did that we were talking about earlier. I think you had said there was another law somewhere that they had to pass to kind of backstop things.
Yeah, I mean, basically, they decoupled the gold from the Federal Reserve, which obviously the Federal Reserve was still a fairly new institution at that point. I mean, it was established in 1913. 1933 was that 20 years later. And they basically decoupled it so that it allowed the federal government to print more money without having the backing of the gold, because up until then, you needed 40 cents for every dollar to be backed by the gold.
Yeah.
And as soon as this decoupling happened, it basically allowed for FDR and whoever to print more money and basically stop the deflation that was happening during the Great Depression. A lot of people don't know that we were going through this massive deflation. Most people are basically know the word inflation because that's all we've heard for the last 80 plus years.
It's all we've experienced.
It's all we've experienced,
Yeah.
exactly. But there's very few people alive today, especially nobody that would really remember going through the Great Depression and the deflation that happened. So FDR was basically doing everything that he could to get us out of this deflationary period and put us into an inflationary period, which was obviously pumping more money into the economy.
What happened to the valuation of gold against the US dollar after the confiscation? Because we paid, what was it, a little over $20?
$20.67 an ounce.
Yeah.
And so they immediately rose that from $20.67 an ounce to $35 an ounce.
All right. Did we raise it, or did we just print a lot of extra money and devalue the currency?
We basically devalued the currency, which is basically what it is. Yeah. Yeah.
Well, that's a familiar playbook to a lot of people these days.
Yeah. History rhymes.
Oh, it does.
Yeah.
So can you imagine how mad you must be to have turned in a bunch of gold to the government?
And then they turn around and they raise it by pretty much $15 overnight.
Yeah, it's like, and everything that we gave you is now worth half of what it was before. Congratulations.
Yeah.
That would have been infuriating. But even more so, this was really interesting. With this executive order, the government actually defaulted on a bunch of its obligations, and there were a bunch of other court cases that followed. I think one of them was like with the Ohio Railroad Company or one of the railroad companies. There were a lot of contracts that said you'll be paid in gold, and all of a sudden those were null and void. All those contracts no longer void, and there were lawsuits over it. But the judiciary lined up behind Congress and behind the president and supported what they had done. Not always evenly. I mean, there were a lot of 5-4 splits on the Supreme Court because a lot of these cases did end up going up to the highest court. But I don't know that we've seen this kind of unity in our government since then.
I don't think so.
But they were pretty well in line, and so we had defaults in the contracts on these, on payment methods, but also gold certificates were suddenly useless because you couldn't trade them for the gold.
Yeah. I mean, a lot of people don't know this, but we did have gold certificates that you could actually trade in commerce. So you could go to the bank and you could say, I have a $20 gold certificate, and they had to give you $20, a $20 double eagle. Yeah. Which is, basically what all of the gold coins are. They're double eagle, half eagle, quarter eagle.
This is where the if you don't hold it, you don't own it crowd comes from. That's that saying. It's from this sort of a problem where you have a and this is also a great example of counterparty risk. We talk about that a lot in counterparty risk, where someone defaults on their obligations, and how if you physically hold bullion, you don't have that counterparty risk. You have it. The bank can't suddenly not honor its obligations. The government can't suddenly not honor its obligations. That risk is not there. But this is a great example of when that counterparty risk has like the worst possible outcome for people holding the notes. And it was a pretty contentious decision amongst lawmakers. There were a lot of people that were against it. And I mentioned there were some 5-4 splits. It was interesting reading some of the dissents because the language at the time was a little bit more flowery. But
Yeah.
but there were the basic argument boiled down to, on one side, there's the constitutional authority to broadly govern money and the value thereof. The exact phrasing kind of eludes me at the moment, but we do have constitutional authority invested in Congress and in the president can, as the executive branch, enforce the laws, and so they have that authority to kind of do what they want with the money supply. And so you had these members of the judiciary saying, yeah, we know that this is kind of a breach, but the Constitution gives them the power, so we're going to uphold it. And then on the other side, you had people saying, this is going to completely destroy the trustworthiness and creditworthiness of the United States of America.
Right. Well, you know what the Constitution also said, or says currently, hasn't been changed to my knowledge, is that all coin should be minted by the government in gold and silver only. And so what has happened is we've let another body, that being the Federal Reserve, print our money, which the Federal Reserve is not government. It's not federal, nor is it a reserve.
No, it's
a private,
a little bit of a misnomer.
Yeah, it's a private corporation
yeah.
that is held by privately held people, making a profit off of us, really, the U.S. citizenry. But if you do go back to the Constitution, it says very plainly that coin should be minted by the U.S. government in gold and silver, and not by some third party, which in this case would be the Federal Reserve.
Yeah, and I think there's some nuance in there around that too, where it's the states have the authority to mint their own currencies in gold and silver, and which is pretty cool because now you have all these states that are now putting in like bullion depositories and things, and so we're starting to get back to those sound money principles that the founders, I think, envisioned and wanted to protect and safeguard. So we're starting to see some products out there like goldbacks.
Goldbacks, yeah.
Yeah.
Texas, Florida. There's a lot of states that are starting to come into the fore that are supporting these goldbacks. And I think that people are actually looking forward to kind of going back to that sound money, just because we've been part of this fiat system for 55 years.
Has had some ups and downs, but mostly a lot of ups on inflation, I think.
Well, if you want to talk about inflation, the Federal Reserve started in 1913, and then all of a sudden in 1971, the inflation was kind of on this even keel from 1913 to 1971. And then all of a sudden, if you look at any historical charts, you say, what happened in 1971? Because all of a sudden, the inflation just spikes.
It just took off.
What's funny is that every single president touts, we've got inflation down, but what they don't tout is that it compounds upon itself. So really from 1913 to now, we've lost about 98 to 99% of our buying power.
That's right.
And so, what you could fill up a shopping cart with in 1913, you could basically fill your hand with today, just because it's the currency's devalued so much.
You can get a pair, maybe.
Yeah, you can get or maybe half a pair. And
a lot of this actually really kind of started with this 1933 gold confiscation, because it was like phase one of taking us off of the gold standard.
Yep.
It's amazing how much we can look at today and tie it back to something that occurred, almost 100 years ago. So there was a lot of things that happened as a result of this gold confiscation. 1933 is really this, it was the beginning of the end of the gold standard, the beginning of a long period of inflation, and it was the beginning of the devaluation, the rapid devaluation of the U.S. dollar, and you look at the compounding effects over time. We really were kind of saved a little bit. I mentioned the judiciary had said well, the creditworthiness of the United States and the trust is just not going to be there. And some people might argue, well, I mean, obviously we're the world's reserve currency. It's the most trusted currency in the world. That's only because World War II saved us from ourselves.
Right.
A lot of people will point to that period and say, well, if we hadn't had World War II, we never would have had the Bretton Woods Agreement, which to a degree reinstated the gold standard for a period of from 1944 to 1971.
Right.
And so,
what Bretton Woods also did was made the U.S. dollar the reserve currency for the world reserve currency. So
exactly. And so it was a it was a gold standard for me, but not for thee.
Right.
Sort of situation. Like for the people, you couldn't trade your dollars in for gold, but other countries could. And so that was the guarantee that we gave. And we said, you can trade dollars for gold, and we'll honor that. But the citizenry couldn't. And so it was kind of this two-tier system. And, so we were definitely saved by that, because had we not done that and had we not been involved in that, we would have been in a really dire situation. And I don't think anyone would have, wanted to make us the world's reserve currency. But you have to remember, at the time, all these nations around the world, industrialized, powerful nations, were in complete ruin from World War II.
Right.
They were destroyed. So comparatively, the U.S. looked really good, even though we didn't have necessarily a history of making good decisions with our money. And as it turns out, we still don't.
Yeah.
So, getting back to the gold confiscation, I mean, it was I think it was kind of an interesting period in time for us, right? I mean, so we were in the middle of the Great Depression, been going on for a few years. Why do you think there wasn't a huge outcry?
I think that back in the day, people saw it as a civic duty to get us out of the Depression, and anything that they could possibly do to help the country out, to get us out of this whirlwind that we were in, they were willing to do it. I don't know of any major dissenters. That I think people mainly willingly brought the gold into the Federal Reserve. But like you had mentioned before, a lot of these were institutions. It wasn't like normal average people. Yeah, exactly. It wasn't like average people like you and me that had, hundreds and hundreds of 20s, stockpiled in our house. There were a lot of people, I guess, in that period of time who just didn't have 5 ounces of gold. Right. And that was the threshold, right? So it was more than 5 ounces you had to turn. 5 ounces of gold. 5 20s, it's $100. $100 back in 1933. That's a lot of money. That's a ton of money to have. And to be you had to be somewhat wealthy to have $20 gold pieces lying around in your house. So
just jangling in your pocket.
Yeah. Yeah.
And, just prior to the Great Depression, you had, so mainly it's rich people, right? Yep. Rich people had all the gold. It's a little bit more decentralized today. I think somewhere between 10 and 15% of the U.S. population has gold. But, I think it's a good point that there was a lot more centralization in terms of organizations, institutions that the government could more or less legally strong arm. There were a lot of individuals we know that did not comply, and the government was only able to take somewhere around a third or less. I think the estimates say there was about 600 million ounces out, and what they were able to grab was somewhere in the neighborhood of like 150 to 200 or something like that. But it's all estimates. Nobody really knows how much. What did they do with the gold again? They melt it down?
They melted a lot of it, and they also a lot of it went over to Europe to pay off debt that we had incurred through the Depression or through World War I. So there's a lot of getting into my numismatic. I'm going to put my numismatic hat on right now. If you look at the Red Book, for example, and you look at mintages of all of these double eagles or even $10 Indians or whatever it is, some of these mintages, especially in the 1920s, are relatively high, very, very high mintages. But when you go and you look and you research and you see how many of these coins still exist, some of them are less than 100. and they minted somewhere in the neighborhood of 400, 500, 600,000 coins, and there's less than 100 left. And the reason for that is because they were all melted. I mean, there was a couple 100,000 1933 double eagles that were minted before the executive order had come into fruition with FDR. And they obviously all got melted, and there's only a handful of those left, and there's only one that you can legally own. So yeah, I mean, they got rid of all of the gold in commerce. Yeah.
So quick question. Did I hear you correctly when you said that they took the gold from the people and used it to pay some of our debt?
Yes.
Well, I guess one of the conspiracy theories in the comments that's been cropping up has a little bit more justification to it. I was not aware they did that, but that's very interesting. So the U.S. debt currently, I believe we're 35.
I think 37
36?
or 38 actually.
Oh God. Okay,
Yeah.
37 trillion.
Yeah.
I mean, it just keeps going up.
Yep.
So I mean,
Yep.
let's just say it's north of 35 and it'll be 40 soon. The current valuations of gold put the estimates of the U.S. gold reserves, which we think we still own free and clear.
Yep.
Don't know for sure. Puts it about 1 trillion. If they were to confiscate all of the gold that everyone owns today,
Which would be nearly impossible.
nearly impossible for a number of reasons. We'll get into that. I don't think it even puts a small dent in the
Right.
debt, but really
Not enough to really make a difference.
Not enough to make a difference.
Yeah.
No. So that's I think culturally back then when they did it, there was probably more support for it too. I mean, you had the 1920s, roaring 20s, the wealthy were kind of in your face with their wealth. I mean, it was a very gaudy time. We'll put it that way. It was very flashy. All of a sudden everything crashes, everyone's suffering. The government says, we're going to take all the gold from the rich people and we're going to use it to juice the economy, and you guys are going to be able to go back to work and get jobs back. Well, that's pretty appealing. And at the time, I think 40% of the currency in circulation was gold. It was gold based. So it was broadly a monetary issue, and the Constitution gives the government control over money. But today, that's not the case, right? It's not really a currency anymore, even though it may have a face value.
Right.
And so there is a little bit of that, but it's more of an investment asset, right?
Yeah. I mean, the main difference between then and now is that the gold was very centralized back then to the banks and to the institutions and the very, very, very wealthy. Today, you can, I mean, granted, gold has gone up quite a bit in the last year. I mean, I think it's gone up like 45% in the last year or in the last calendar year.
It could be even more today since we've been sitting.
Yeah, it's probably gone up $20 since we started this. But everyone since 1986 in the U.S. anyway, since the Gold Eagle program started, has been able to invest in gold bullion. Yeah. And so it's not as centralized like it was back in the 30s. Everyone can own gold. You can order it from the U.S. Mint today. You can order a 10th ounce. You can order half ounce, quarter ounce, 1 ounce, whatever. APMEX sells, 1 gram gold bars if you are so inclined to own a little bit of gold. Obviously I'm a huge gold bug myself. I don't know why I'd be working here if I wasn't. But I mean, I highly encourage everyone to buy gold because it is such a great hedge against inflation. But I mean, everyone can have gold these days, whereas back in the 1930s, it was, like I said, very centralized toward the banks and the institutions. And so it was easier to confiscate back then than it would be today. I mean, I know that the mint has obviously records of what the mintages were for each coin from each year and so on and so forth. And they've minted so many millions of ounces in the last, 35 years or whatever it is, 40 years. But to be able to get all of that gold back, and we're not in a such a tumultuous time. We're not in some type of depression. Some would argue we are coming out of a recession from the last 3 to 4 years. Well, we won't get into that, but I mean, there's
that's another podcast.
That's another podcast.
Whole other episode.
So, I mean, I just think that it would be very, very difficult for the government to come in and say, okay, we need your gold and we need all of your gold, and we're going to come find you if you don't.
I mean, that's a logistics problem, first of all, because it's not like we're all keeping it in centralized locations like they had in 1933. And even then, they were still only able to get at most a third of what was out there.
Right.
At most. So there's no way, with things being far more decentralized today, with private vaults and people just owning and storing it secretly in their homes, and there's just no way. Logistically, I don't know how they would do that. They're not going to go door to door and search under everyone's floorboards. The other thing, though, is it's not a part of the monetary system in a significant way today. And so the broad legal authority that existed back then is a little bit weaker as it applies to gold today. And it's more of an investment asset. So I think if you start reaching and grabbing investment assets, that's a whole nother problem, because now I think it's falling under more like property rights disputes. And
that opens up a whole new can of worms, because then it's like, okay, well, if you're going to take my gold, are you going to reach into my 401k?
Yeah.
And I just don't see that happening, because, obviously the citizenry of
what about stocks? What about bonds?
Exactly. It's like, well, where does it stop? Where does it end? I mean, what do I really, really own? I mean, I know that, Governor DeSantis in Florida has been talking about potentially, getting rid of property tax, which I know is a hot topic these days. It's like, okay, well, if I really own my home, why do I keep paying taxes year after year after year?
Some of those taxes are very, very high.
Yeah.
It keeps going up with inflation. So, and if you're on fixed income, it makes sense that they're looking at it as a problem to solve.
Yeah. I mean, I was just in Montana a couple months ago, and a lot of these people are losing their homes on Flathead Lake. Who've been there for 40, 50 years because of property taxes. They've paid off their house. Yeah. Their house has been paid off for 10, 20 years, but their property taxes keep going up, and they can't afford to live in their own home anymore. So they're being pushed out, and that's really sad.
It's horrible, and it's going back to that root problem of inflation, and then also, overtaxation from the government. But again, another podcast. Another podcast. But, so that's, I think that if you're looking at the current state of affairs in terms of gold as an investment asset, government going in and grabbing that's just a naked wealth grab. They're not fixing anything structural with the monetary system or the supply. They don't have that as cover. There's no way they could do that. So it's just going to look like pure confiscation. And I think if the government starts doing that to manage their debt, the entire world panics and ditches dollars. Like the whole system collapses if they do that. That's my theory. Because, if you're an outside country looking in, you're holding like the notes of this sovereign nation, and you're like, yeah, this is a safe currency where I'm storing my country's wealth in. And all of a sudden that country starts raiding their citizens' piggy banks and stealing from them to pay off the debts, and they haven't managed their deficit. I'm gonna just get rid of all that. I'm going to get rid of all that as soon as I can and put it into something else. I'm going to put in other currencies, commodities, anything but that. Now, that would be me. It's a bit of an extreme example.
Sure.
But there's a real risk that you would have massive abandonment of the dollar if that was the route they took to try and manage their debt, was just raw theft of the citizenry.
Right. And then at that point, it asks the question, well, where is my money safe? If it's not safe in gold, is it still safe in the stock market? Is it still safe in my 401k? Is it still safe in my other investments? Is it going to cause a real estate bubble like there was back in 07, 08? I mean, it just opens up a whole litany of questions that, you never thought you would ever have to answer or figure out for yourself to, have a nest egg for you for when you retire. So.
Absolutely. So we're looking at it, and, the question of, could the gold confiscation happen today? Could the government come and just take it? Well, look back at 1933, they didn't really have the legal authority to do it, and they did it anyway. Right. So in a sense, you could say, yeah, absolutely, it could happen, because the legality was very gray at the time, and they did it anyway. But is it practical? Logistically, politically, does it solve one of their problems? Like, where's the political motivation, incentive, the willpower to do it? I just don't see it being something viable at this point in time. Now, if the conditions lined up differently, though, if the country did go into like really dire conditions, could there be some form of a repeat gold confiscation?
Yeah, we talked about earlier, I just don't see that happening. I think there's too much widespread gold around the country, around the world. People are holding it privately, like you said. I don't see that happening. I think that the U.S. is moving into a different direction monetarily, especially in the last 8 months, let's say. I think tariffs are they appear to be working. Obviously, knock on wood, we don't know.
Oh God, yeah.
Yeah, we don't know exactly how all that's going to turn out. I mean, we all thought that there'd be massive inflation because of these tariffs, and obviously we've only had a couple of months under our belt with what's going on. But we'll have to wait and see. But as of right now, that's bringing in trillions of dollars into the U.S. economy, which a lot of people don't know. But from like about 1880 through 1928-ish. Tariffs were a huge part of the United States economy. That's kind of what kept us running. It wasn't really until the Federal Reserve, kind of going back to the Federal Reserve again, is when they basically said, okay, we're not going to tax all of these different countries. We're going to tax our own citizenry. And so if you look at the charts, you can see all these tariffs really, really high in the 1880s, 1890s, early 1900s. And then all of a sudden, after the Great Depression, we started not imposing tariffs anymore. And we obviously ended up having this gold confiscation. We had the Bretton Woods with the national, the international.
It was a complete restructuring.
It was a complete restructuring of the monetary system from like 1933 to 1944, 45-ish. And then when we became the world's reserve currency, everything kind of leveled out for a little bit.
Yeah.
And then 1971 happened. And, Nixon took us completely off the gold standard, decoupled us completely. And then that's like what I said, the inflation really kind of peaked at that moment in time and keeps going.
So that's a really important piece of context there, because it wasn't like this gold confiscation happened as, just an isolated piece of legislation. I mean, it was a part of a broader restructuring that was occurring at the time, and it had a whole purpose towards restructuring not only our monetary system, but how it fit within the broader ecosystem of the era. And you're right that there's no, not sure what the word I'm looking for is, but maybe momentum towards that right now, where gold would be a cornerstone piece. I mean, they had to get all the gold because they needed to take us off the gold standard. That was a part of their plan. It was a part of the economic theory they were adopting of government stimulus and intervention to get out of the Depression. But there isn't really a strong driver that would cause another gold confiscation. So that's the political motivation factor. I think that one's just absent.
I mean, I think that we're somewhat going back. Like we said earlier, history kind of rhymes. I can see us kind of going back into some type of gold-backed dollar, whether that's completely gold backed, or maybe it's gold and silver backed, or maybe it's precious metals backed, or maybe even, this is kind of a weird thing to say, is maybe it's gold, silver, and some type of crypto where it's backed. Gold has been around for thousands and thousands of years. It's never been worth nothing. But over time, they've figured out a way, I say the collective they, have figured out a way to sort of manipulate the gold market. And so a lot of people think that it should be worth $5,000, $6,000, $9,000. I've heard $20,000. I've heard $50,000 an ounce on gold. And we have Bitcoin, came along in 2008, 2009. That's a relatively new asset. This is sort of, I kind of liken it to like a new gold. It's kind of like a it's a new
digital
form.
gold.
It's digital gold. It's
heard that phrase a few times.
It basically, gold and silver have always been a hedge against inflation. Well, you almost have to kind of add Bitcoin into that conversation as well. And the great thing about Bitcoin and crypto is that it hasn't been around long enough for them to figure out how to manipulate the market, which is why you see Bitcoin at $100,000, $110,000, $120,000 a Bitcoin. And so, I can kind of see there being some type of backing of the US dollar. And I say the US dollar, not the Federal Reserve note, where, there's some type of mix where it's gold, silver, and crypto. And I think that, it would still be used as an investment. And of course, we would still need to have the gold, which I know hasn't been audited fully in Fort Knox since 1950.
Wouldn't that support the idea of a confiscation though?
It would, but again, it's too impossible to. There's what 350 million people in the United States. 15 million of them, or 15% of them, own gold, maybe more.
Yeah.
You have no idea where it is. It just doesn't make sense.
If the government comes knocking on your door looking for your gold, did you lose it in a boating accident? Did you bury it? What did you know?
Yeah.
It's the
yeah.
How are they going to get it?
The thing is that there's no paper trail on any of this gold. I mean, APMEX doesn't report anything to the government, in terms of who bought what and everything. I mean, obviously, if you bought from the U.S. Mint, they might have a record of it, but there's really no record of it. I mean, you could bury it in your backyard. You could put it under your mattress. You can bring it to Uncle Bob's house and, whatever. I mean, there's so many things that you could do with it. Say, I don't have the gold. So I don't see that happening.
It would definitely be a logistical nightmare. I would not want to be the guy undergoing that job.
Yeah.
That would
Yeah.
I think what we can glean from what happened in 1933 was it was just a very different time. There was a really big sort of structural change occurring. Gold was a central part of it because it was a central part of the monetary system. And there was broad authority over it because of that. Fast forward to today. And a lot of those puzzle pieces, they just aren't there. The motivation, the logistics, the ability to actually do it, it's missing. So could gold confiscation happen? I mean, theoretically, anything's possible.
Anything could happen. Yeah.
And it really shouldn't have been possible back then. They did it on really suspect legal authority.
Yeah.
I mean, that was, in terms of levels of shadiness, it's like a 4 out of 5 shady.
Yeah.
So not something that I would expect to happen again today, but it is possible. So do with that what you will, but we think it's not likely.
Right. I would say it's not likely as well. It's a logistical nightmare. There's just too many ounces out there, too many customers, too many investors. And like we said earlier, once you confiscate one, it opens
the door to everything else.
Pandora's box to everything else.
You're going to have every lobbyist on Wall Street storming Capitol Hill if that happens.
Yeah. So,
Ted, thank you so much for joining us. It's been one of the greatest conversations I've had this week.
Thank you.
Really, really, really great to have you on here especially with as much knowledge and information you have on the past history and how it's really affecting things today. So appreciate you joining us on the podcast.
Thank you for the invite. I appreciate it.
Thank you for joining us on the Market Pulse podcast. If you want more content like this, please subscribe or share with a friend. Your support helps us produce new content just like this. Thanks for listening, and we'll see you next time.